Opendoor had another eventful trading day on Wednesday, and as we turn toward Thursday's pre-market session, there are some key themes I want to focus on. The stock clawed back about 14 cents in the after hours, which shows that buyers were willing to step back in at the end of the day. But make no mistake, the $4 level is becoming a critical support point that's likely to be tested again as trading picks up. Wednesday's regular session was tough. After opening strong and rallying as high as $4.97 in the morning, the stock couldn't hold those gains. By the close, it was down 68 cents on the day, finishing at $4.02 per share, a loss of about 14.5%. That's a sharp decline. And yet, if you've been following this stock closely over the past couple of weeks, you know this is not unusual. Opendoor has been experiencing exactly these kinds of swing cycles, big runs higher, followed by sharp profit-taking pullbacks. Volatility is baked into the story right now. The important thing is to interpret what this volatility means. To me, it doesn't signal collapse or crisis. It signals a stock that is still searching for a stable range, still digesting the big rally we saw last week, and still tied to short-term sentiment swings. But underneath that, the long-term story is unchanged. In fact, it's in moments like these, when the candles are red and social media starts buzzing with frustration, that the real investing conviction gets tested. Let's talk about that frustration for a moment, because it has been growing louder. If you scroll through X or other platforms, you'll see retail investors saying the same thing. They want more updates from the board. They want transparency on the CEO search. They want clarity on the company's pivot toward an asset-light business model. In short, they want communication. And when they don't get it, they start to lose patience. That's not to say the board has been inactive. We know from filings that the search firm Spencer Stuart has been retained to run the CEO selection process. We know that interim leadership under Srisha Radhakrishna has been working hard to stabilize the business, engage with retail, and build out AI-driven tools like Repair Copilot, Risk AI, and the Key Agent app. But the retail crowd is hungry for more visible action. They want to see signals that the board is moving quickly and decisively. Eric Jackson has been one of the louder voices in this discussion, and has floated the idea that insider buying by board members could be a powerful signal. If the people on the inside of the company are willing to invest their own capital into Opendoor shares, it would show alignment with shareholders and conviction in the company's future. Historically, insider buying has always been a bullish indicator for stocks. But so far, we haven't seen that kind of move here. At the same time, names like Keith Rabois and Travis Kalanick continue to be thrown around by retail investors as potential CEO candidates. Now, let's be realistic, those are speculative ideas. There is no confirmed news that either of them is in the running. But the fact that their names keep surfacing speaks to something bigger. The retail community wants visionary leadership. They want someone with entrepreneurial DNA who can take Opendoor from being just an iBuyer to being a true real estate platform. So the frustration is real, but I don't view it as negative. I see it as energy. I see it as a retail community that is more engaged, more invested, and more vocal than ever. That pressure, in my view, is healthy. It keeps the board accountable. It keeps leadership aware that retail shareholders are not just along for the ride, they're active participants in shaping the narrative. Now let's shift back to the stock itself. The $4 level is now the base of support to watch. Wednesday's close at $4.02 puts us right on the edge of it. If that level breaks down meaningfully, we could see some further selling pressure. But if it holds, it could mark the foundation for the next rally attempt. Remember, just last week we were talking about $3.50 as the floor. Then it became $4. Each time the stock resets higher, even with volatility, it sets up a new range. And that's why I think Thursday's pre-market action will be all about testing that $4 support. But let me be clear, the bigger story here isn't about whether the stock trades at $3.90 or $4.10 on Thursday. The bigger story is about the long-term drivers that will determine whether Opendoor has the potential to climb not just back to $5, but eventually toward Eric Jackson's much-discussed $82 target. And that story comes down to three levers: leadership, business model, and macro environment. The first lever is leadership. The CEO search matters. Carrie Wheeler's exit created a vacuum, but also an opportunity. The next CEO will set the tone for the company's next phase. The right pick could inspire confidence, attract institutional interest, and provide stability. The wrong pick could do the opposite. So this is the single most important near-term catalyst for Opendoor. Investors, both retail and institutional, are watching closely. The second lever is the business model. The original iBuyer model was innovative, but also capital-intensive. It required Opendoor to buy homes, carry inventory, and take on risk. That's heavy. What the company needs now is to pivot to an asset-light model, one that monetizes the seller funnel in smarter ways, leverages partnerships, builds out agent networks, and relies more on technology than on capital. This is where AI plays a central role. By deploying tools like Repair Copilot and Risk AI, Opendoor can cut costs, speed up processes, and operate at a scale that traditional real estate companies simply can't. Done right, this positions Opendoor not as a risky iBuyer, but as a real estate technology platform. That's a narrative shift that could dramatically change how the market values the company. The third lever is the macro environment. And here, the winds may be turning in Opendoor's favor. Jerome Powell's comments at Jackson Hole strongly suggested that rate cuts are likely coming in September. Lower mortgage rates mean more buyers, more sellers, and more housing activity. And housing activity is oxygen for Opendoor. The more people are buying and selling homes, the more opportunities flow through Opendoor's platform. If the company can align its strategic pivot with a more favorable housing market, the upside potential is enormous. That's why I continue to remain bullish, even on days like Wednesday. A 14.5% drop is not fun to watch. But it doesn't erase the fundamentals of the story. It doesn't change the fact that the retail community is engaged, that leadership is working on an AI-driven pivot, or that the macro backdrop could soon turn supportive. What it does do is remind us that volatility is part of the journey. You don't go from $4 to $82 in a straight line. You go through ups, downs, consolidations, and tests of conviction. So as we head into Thursday's pre-market, my message is simple. Watch the $4 level, that's the technical battleground. But don't get lost in the day-to-day noise. The bigger test is whether the board delivers a strong CEO, whether the company successfully transitions to an asset-light model, and whether the housing market picks up as rates come down. Those are the things that will fuel the real rally. For me, Wednesday's sell-off was another opportunity to build my position. I see the frustrations online, I understand the impatience, but I also see the bigger picture. The road to $82 is long, but it's still wide open. And I believe Opendoor has the ingredients to get there. It won't be overnight, but with patience and execution, it can happen. So as we approach Thursday, stay focused. Volatility is normal. Consolidation is healthy. The bullish case is intact. And the story of Opendoor is still just beginning.